Hey everybody, Jake here with TrendSpider to go over the Thursday night video. And this is something I haven't really done before, where I actually do a video in the beginning of the week and then do another video at the end of the week and go over the same stocks and see how the stocks have done over the week. So I'm actually really excited to do this video because it's been a really interesting week on quite a few stocks, especially the ones that we already did go over on Tuesday. I'm going to go over those, but I'm also going to go over a couple others into Friday. So the first one, Roku, unbelievable rip here. What I want to go over first is really the raindrop here. This was really the first thing that intrigued me, at least. I'm sure everyone else had their own strategy here, but just from a raindrop perspective, seeing this big chunk of volume above this resistance zone on Monday was, really just it was kind of like a gimme, right? I don't want to say it was a gimme, but we could see buyers were in control. It was the first time that buyers had been in control above this line since we really tried to find kind of a secondary pivot here after moving up. We finally found one right at the Alphatrends anchored VWAP from the March 17th low. We bounced off that, finally got some volume, and then just have rocketed since. And what's really interesting about this is, one, the raindrops were really cool to see, kind of the volume showing us what was going on. But two, the anchored volume by price was incredible to see, this in action, right? So the first thing that we saw was, one, we saw this gap up right into this initial supply zone. And if you look at the original video, you'll see here that we kind of gapped up right into this zone. We found resistance for not that long, only 2 days here before demand started to outpace supply, and we continued up. Now, the really interesting thing about this is the fact that the volume gap really told us that once we did break through that initial supply zone, it wasn't going to take much to break the price to the next supply zone above. So in this case, we can see here, once we gapped up from yesterday, we gapped up into this volume gap and literally rocketed straight up to this next supply zone. And look what happened right when we hit the supply zone. We got rejected and we pulled back and closed right below it. So this, I gotta say, this is probably one of my favorite case studies that I've ever seen on the anchored volume by price. It's just been absolutely fascinating to watch the price respect these areas and really see this thesis kind of come to fruition. I, as a trader, got out way too early, as I usually do, but that's okay. You don't always have to get the whole move. You stick to your plan. You stick to, if you say you want to sell at the next supply zone above, you stick to your plan and you move on to the next trade. As much as using a technical analysis platform can help you get an edge like TrendSpider, being able to stick to a plan is probably the hardest thing I've ever done in trading. Technical analysis, yes, there's things you have to learn, but being able to stick to a plan consistently without letting your emotions get in the way is a whole nother thing. So being able to just say, hey, if price gets here, I'm selling and I'm moving on, you won the trade. Not only did you make money, you stuck to your plan and you got out. So that is the plan that I stuck to. Do I wish I would have held longer? Of course, but that's just not how it worked out. And I move on to the next trade I'm in. And I'll go over a couple of those simply just to show you guys the thesis behind it, what features I'm using, and that sort of thing. So this is Roku. I want to go over Nvidia as well. Remember, Nvidia was a stock that we were going over. And what we were really looking at here was the fact that, one, it was in this inverse head and shoulders. But the most important thing about this was, two, we had this huge volume base here creating just an absolute kind of point of control explosion. And then three, this was a laggard, right? We already saw this set up in Amazon. We already saw this set up in Netflix. And look what happened. This is literally mirroring the Amazon and the Netflix moves, as well as a couple other ones. So, this was just one that, once again, what happened? I got out early. Nothing wrong with that. I, really just wanted to make X amount of money, which I did. Sometimes that's not always the best plan. Sometimes I'd rather say, all right, I want to sell at this level than necessarily say, hey, I want to make this X amount of money and I'm done. No, there's no wrong way to trade, right? You can trade in that sense that if you want to make an X amount of money and once you make that, you're out, that's your plan and you stick to it and you make money that way. If you want to stick to a specific price level on a stock and not necessarily worry about the dollar amount, just worry about, the actual plan you have in action for the price level above or below, then that's your strategy. And if it works for you, do it. So the thing about TrendSpider is you can use really a ton of different strategies. There's not one strategy that you can only use. So this is just one of the many that you can use. But being able to anchor this volume by price and saying, all right, what is the volume profile since this February 19th high, and then you had the reversal the next day, where are the shares holding since that point? We were able to identify that very easily with the anchored volume by price. And remember, I'm able to move this very easily. And as I move this, notice the volume's going to change. So being able to say, all right, I want to start it at this candle, seeing that volume is incredibly useful. So that is Nvidia. I do want to go over a trade I'm currently in and kind of go over the reason why I was in it. And also look over essentially, holy moly, GE is ripping. Essentially go over why, I entered this trade. And, I just want at TrendSpider, right? Our team wants you guys to realize that we're traders too. We're not just making this software and saying, hey, this was cool. You should have done this 3 days ago. We want to be able to show you guys real life examples, what's working, what's not working, and all of that good stuff. So GE is a trade that I actually mentioned, not a trade that I mentioned, but a chart that I mentioned a couple days ago. And what I was looking for was I was looking for the price right here to find a support zone around this big base of volume. And I got in a little early, but I still had some dry powder to average down in the low 640s, upper 630s. And what I was doing was a couple things. One, I was looking at this divergence on the Williams percent range. What I was looking for was I was simply saying if the Williams percent range drops below this point, we no longer have divergence. But if the Williams percent range closes above this line and the price is lower than it originally was when we bottomed out here, we are going to have positive divergence. So I had a couple theses here. I had the obvious thesis where we had this huge volume base here. And then what I really found interesting, and this is just from looking at so many charts, I was able to see this pattern happens quite often. A lot of the time, you've got the price kind of finding a general bottoming area where the point of control is. In this case, it's here. And what you'll notice that if we look at another example like SPCE, you'll notice the same exact thing happened, right? We've got this anchored volume by price. I anchored it from this February 20th reversal. Remember, you're always wanting to anchor either the volume by price or the Alphatrends anchored VWAP from these important reversal zones, i.e. the top and this big gap down that we had on February 27th. And what you can see here is in this volume by price, we had the same almost exact move as we did in GE, right? We had the price kind of trying to catch a bid around the point of control here, but then the price started to break down here, and you actually had a continuation down before reversing. So this is very similar to what's going on in GE right now, right? We're essentially at this point here in GE. So what you want to do in this market is you want to look for those stocks that are essentially lagging the market. So, right now, SPCE has made its move. Tesla literally has the same exact setup here. It's already made its move, right? Same thing. We anchored the volume by price and the anchored VWAP from this reversal point. Notice how the price originally tried to catch a bid at this point of control, and then it started to break down, kind of faking people out. But notice in all of these examples, this breakdown never goes below the first low. We always stay above the first low here, and then we move up. So GE, if we go back to that chart, notice that we are still above that initial low that we put in. And this is kind of like your classic laggard setup. So we'll have to see what happens with GE into tomorrow. But if I were to guess, just simply based on seeing how this has played out in other stocks, we will probably get some type of gravitation back towards the point of control above. And, that's my thesis on why I personally entered it. Was I under some unrealized losses in this whole kind of move down? Absolutely. I think I was down at one point like 10% on this. But if you're scaling into a position, that allows you to kind of allocate your risk over multiple prices rather than just saying, I'm going to get in at $7 and I'm going to go into a full position. It's like, no, I'll get into some at 7, i.e. I'll get into some where it looks like a decent area here. But then unless the Williams percent range breaks down with this divergence, I'm going to still be bullish here. And that's why I continued to add on this breakdown yesterday. I didn't add any today because I was comfortable with the position that I entered. But today, after hours, we got that huge pump in the overall markets. So, I'm thinking in general, the broad market should probably rip tomorrow. I have no idea what's going to happen, but just based on kind of the technical setup, that's what it's suggesting. So that is GE. Another one I want to go over here is CGC. That is one that I went over in the video the other night. Same type of thing, right? We're right in this zone where we're right at this point of control, which I've called the demand zone here. This is essentially where all of the people since the February 14th gap up, which was earnings, this is around where most people are holding. Most people are holding shares from 15 down to around 13. So naturally, the price is catching a bid around this zone, and we'll just have to see if this is one of those laggards as well that moves up, into Friday when we've got this quite a big move in the broad market. So that's CGC. Another one that I want to go over, and this is a case study for a couple of reasons. This is CGC, all right? CGC is one that I've also been trading, obviously down quite a bit. I'll tell you guys where I started to enter. I started to enter around here. I think I entered here. I entered here. And then I finally entered my final tranche down here. And what's really interesting about this is, one, obviously they are a completely crap company. I'm not necessarily playing this because I think CHK is going to automatically not be a potentially or at this point bankrupt company. But what I'm playing this for is I'm playing the inefficiency, right? One thing that's really cool about this is we've anchored the volume profile from January 3rd. And if you look, the price has only been at this particular price level for 2 days. So that tells us that since January 3rd, most of the volume over the last 2 days is holding at almost the point of control. So that tells me a couple things. It tells me, one, anybody that was holding shares here likely capitulated either here or here. And so that tells me that, one, we do have some type of demand here because everybody who's selling into this 16 price zone, there's a buyer coming in to buy that. So naturally, we've got this massive volume gap above. If, let's say, oil did catch a bid, CHK is one of those companies that just had a 200-to-1 reverse split. If there's a massive squeeze in the oil market, you are going to see a massive low float squeeze on CHK. They had 2 billion shares. They did the 200-to-1 reverse split. Now it's only 10 million. So, this is not your traditional stock to play right now, but that is my thesis. I'm seeing, one, oil is starting to slowly catch a bid here. And I do like to play CHK as a high beta oil play, meaning, if oil goes up X%, CHK is likely to go up more just because it's very volatile. But when you're in these types of situations with this fundamental type of situation you've got going on with CHK pretty much bankrupt, technicals are not always going to play out like they would in a stock that's actually fundamentally sound. So this is not, me saying, hey, CHK is a great trade. I just want to give you guys my thesis on some of the trades that I'm in right now and kind of the reasoning behind it. So the last one that I wanted to go over here was Disney. Disney is an example of something that I really have found incredibly interesting here. If you do, um, if you do the anchored VWAP from February 5th in this case, but notice here, this was Disney's earnings, so this is why we topped out here. SPY topped out on February 19th. So you don't always necessarily have to anchor it from the exact date. You just want to anchor it from the point in time where we topped out. For Disney, we topped out on February 5th. SPY, we topped out on February 19th. It doesn't really matter. We're just picking the point that the status quo changed. And in this case, the status quo changed for Disney on the 5th. So what we can see here is, notice that Disney has not actually broken through this anchored VWAP from February 5th. If you go to SPY or QQQ or any of these plays, you'll notice one thing very quickly. These have already broken through their anchored VWAPs. So if we go, let me remove these. If we go and look at SPY, Disney is lagging by a lot. Disney is just getting to this point here where it's just hitting that anchored VWAP from the top. So my reasoning for getting into Disney was, one, because it's lagging the market. It hasn't even broken through this anchored VWAP yet. So that was one reason. And then two, I mean, look at all this volume here. You can see, one, we've got this, if I draw some trend lines here kind of loosely, we've clearly got this very strong ascending triangle here that's setting up. If I make this a little darker, you'll see, if we break through this area, it's on. I mean, I would be shocked if this thing doesn't rip to the next supply zone pretty quick. And then this is when your anchored volume by price comes in, right? So we've got a lot of accumulation down here. And then all of a sudden, we've got this volume gap, which means there's not a lot of shares holding above. If there's not a lot of shares holding above, you don't have a lot of supply that buyers have to deal with when buying. The price just goes up until you hit this next level of supply. So first, I want to show, if this did absolutely rip up, we could use the Roku model, right? This is our gap. This is our volume above. And so if we go back to that Roku chart and then go to the Disney chart, we can kind of see almost, what could possibly happen here, right? We've got the anchored volume by price, very similar to how Disney was. This was just almost the exact candle we had on the Disney earnings. We've got the price below this anchored VWAP, and then we gap right into the supply zone. So if we look at this chart, and then we look at Disney, look at where we're at in this equation. I'm not saying we're going to gap up into 116 tomorrow, but we're setting up almost identical to what Roku was doing literally, a few days ago. So you really want to look for these laggards that have not made the move yet. And one thing that I've found really useful to look for those laggards is simply by anchoring that VWAP and looking for those plays that have not broken through this VWAP yet. And those may be the ones that need to catch up with the broad markets. So hopefully this was not too much information. I'm really excited about this video. There's just so much going on in the market right now. I hope everyone has a great Friday, and I'm looking forward to doing the weekend video and doing our podcast with Steve Burns on Sunday. Thanks so much for listening in, and have a great night.